Well, let's take a closer look at this latest report on China's economy with Saruhan Hatipoglu. He's the CEO of BERI and CGTN's Global Economics Analyst. Good to see you.
Good evening.
So let's see, the bottom line from the National Development and Reform Commission is that the economy was stable in May. So what are the bright spots as well as the challenges, according to the NDRC?
Well, I think the bright spot was the exports again. It grew 12.4% against expectations of 10%, which was quite a big deal. Not many people have expected that. And I think also the MSCI A shares getting included in the MSCI emerging markets, and then money starting to flow into companies in China, which they didn't get earlier. I think that brought up confidence as well. But I'm a little less sanguine, Rachelle, about this report, than the previous one that we discussed, because we're seeing a significant deceleration in infrastructure spending. As you recall, we talked about this infrastructure spending should decelerate, but the speed with which it's happening is raising some concerns over intra-growth in China. About 30-some provinces we're talking about, majority of which are still dependent on this type of spending. So how will that have an impact on the GDP looking a couple of quarters ahead? That remains to be seen.
So something to keep an eye on there. And keeping an eye, what about investors? How are they viewing what's happening with China's economy? What sort of opportunities do they see?
Well, they're very happy with the reform measures as slowly as they're taking place. I've talked to several of my clients about that. They're frustrated, but they're happy at the same time. It's an interesting feeling. But you hear that quite a bit. And there is obviously, again, as I mentioned, MSCI A inclusion is a very big deal. And that ratio is going to increase to 0.8% in September. So that's going to bring quite a lot of capital to Chinese companies, which didn't get this capital in the past, because 85% of these shares are held by retail investors in China, and they're not able to buy that much because they're expensive. So foreign investors are, shall we say, cautiously optimistic.
Now let's look at some of the NDRC's other comments. They were talking about the prices of industrial products like steel and oil being sharply higher, and they're saying that at least for steel, it's because of the measures to strengthen the industry. Talk about some of the steps that they're taking to do that.
Well, first of all, the 18% increase was higher than anticipated. I'll give you that. But the price increase is quite normal, because they have actually announced this in November with winter production cuts, actually. They have announced that that would apply from January to mid-March. And we're seeing the impact of that. So that's one reason we're seeing steel prices increase. But at the same time, the low quality or substandard steel production, China is cracking down on. They're sending inspection teams to 25-some cities in the north, going over this production. So they're trying to get rid of this. Environmental protection is the top of their agenda. So I'm not surprised, maybe about the magnitude a little bit, but also there's a lagged effect, especially after winter production cut. So we will see steel prices a little on the higher side.
And speaking of steel, something that we know has come up when it comes to U.S. tariffs, how do you see the China-U.S. trade conflict affecting China's economy?
So far, not bad. And I hold a contrarian view on this one, because 50 billion tariffs is about 0.1% of the China's GDP. So this is not something to be worried about yet. But I also upgraded the risk here in terms of a trade war. It's no longer a possibility. I think it's a probability. And the way to really stop this from escalating is really both sides to get together, seriously meet regularly, and item by item, if necessary, talk about how these will have an impact. Because in the long term, tariffs will have a negative impact on both countries' economic output.
Now, as this is going on, we are still seeing China continuing its efforts to open up its market and also lift restrictions on some sectors for foreign investors. How are we seeing that reflected in the economy?
I think it's working. They're doing it step by step. They did the financial reform. They announced it at least. But I think the impact of this is going to be dependent on how the relations with the U.S. is going to go. With the, for example, sanctions on Iran, they're coming back, and Chinese companies will be able to get into Iran, and more European countries going to Iran. So the relationship between European companies and Chinese companies will be stronger. So I think foreign investment is going to increase in China. The composition might change from American to European.
All right, always good to have you on. Saruhan Hatipoglu there, BERI CEO and CGTN's Global Economics Analyst.